Welcome to the Real Estate YouTube channel. Real estate is a suitable option, especially in tumultuous markets, for knowledgeable investors wishing to invest in a dependable asset and they need a savvy real estate agent on their side. By changing your perspective a little and concentrating on a few aspects of your organization, you have the chance to stand out as a resource and serve them. Do you want to operate with all cash purchasers that purchase a number of homes annually, close quickly, and won't compel you to attend open houses every Sunday? Working with real estate investors could well be the finest career choice you'll ever make as a realtor if you're ready to pick up a few new skills. Please understand that this is not a quick money plan for new agents, and it is not suitable for everyone. If you want more real estate content, subscribe to the Real Estate YouTube channel and hit the notification bell. Investors right now require the following from an agent. Number 1. An understanding of the rental and vacation rental market. Understanding the ins and outs of the neighborhood rental market is essential for investors wishing to acquire a home and rent it out to long-term tenants or tourists. Every city has its unique rental laws, especially when it comes to Airbnb and other holiday rental websites. Buyers should consult with a representative who can advise them on whether the city will let them use the property any way they see fit. One of the first items to discuss should be how they want to leverage an investment property and whether or not that is possible given the constraints in the area. If they can accomplish their objectives in a certain city, they might need to shift their focus to another area. Number 2. Knowledge about local emerging markets. The finest investment is made when a house is bought for a bargain and subsequently appreciates in value over time, even without any modifications being done. Investors greatly benefit from agents that have a pulse on the regional market. Ideally, you can provide them advice on areas, including streets, that aren't presently seeing growth but are anticipated to do soon. Think about the kind of firms that are expanding into the region, particularly those that are big and in the tech industry. Along with the rising demand for houses and higher costs, jobs will also follow. Moreover, agents need to weigh in on any temporary limitations and rules that may exist in each zip code to keep your clients informed, stay up to speed on local regulations, and the most recent rental market news. Think intelligently, be organized, and be well-versed in the local area. It feels terrific to assist an investor in finding the property and watch as its value increases over time. If you succeed, they'll probably return for their subsequent buy as they grow their portfolio. Number 3. Be an expert in your market. When it comes to attracting real estate investors, you need to know more than simply days on market and year-over-year appreciation in the neighborhood. You must grow to be a true authority in your neighborhood and its sub-markets. Before diving into your local market, you need to comprehend the 30,000-foot picture of the sector. Start by keeping up with local economic news and housing information to better inform your clients about what's happening. You should also be aware of nearby facilities and attractions, changes to the zoning code, and impending development projects. Learn about the key companies, nearby schools, the newest restaurants and retail locations, and public transit alternatives in the neighborhood. By examining the regions in your market that permit short-term rentals and have the most excellent rent-to-value ratios, you may identify the submarkets that could include the next neighborhood that is likely to catch the attention of investors. Number 4. Learn how to be a trusted advisor. If you want to become the go-to agent for investors, you must offer advice and be ready to assist them in avoiding frequent blunders. Particularly when they are inexperienced, investors frequently make 3 errors. Overcharging for real estate. Due to the excitement of real estate investment, it is simple for investors to let their zeal or competitiveness cloud their judgment. This is particularly true when they are vying for a transaction in a circumstance with several offers. One of our mentors said, "Throughout my 27-year career, I have witnessed several investors overpay for properties merely to be able to claim victory." The phrase, "the money is made when a property is bought, not when it is sold," is common in real estate investment. This is due to the fact that it is simple to profit when a property is bought for less than it is worth. but it is extremely difficult to transform a bad acquisition into a profitable investment. By instructing your investors to establish their maximum offer price before making an offer and entering a bidding war, you may assist them to avoid getting caught up in the excitement, minimizing the cost of the repairs. The majority of investors are often quite self-assured. If they didn't, they presumably wouldn't be investors. Their confidence, meanwhile, can make them ignore details, underestimate the cost of repairs, and underestimate the amount of time it will take to do the task. Use the fix and flip property evaluation process to help investors avoid the error of underestimating their efforts and resources. It was created expressly to make it easier for you and your investor to thoroughly inspect a property. Overpricing the property after they close on the property or while they are completing repairs. Many inexperienced investors have the propensity to increase the after-repair value. When they do this, they have the option of pricing the house above or below the market. And as we all know, an expensive property loses its initial appeal to purchasers and can quickly lose its marketability. After a few weeks, the price is adjusted, and ultimately an offer is made far less than what the property would have sold for had the price been set right at first. We are aware of better. Avoid making this error and assist your investors by calculating the ARV precisely and advising them to adhere to it. Number 5. Invest in real estate yourself, or be willing to. In our mentor's experience as a real estate investor and agent, also tends to not invest themselves. That is due to the fact that when you have never invested any of your own money, telling someone else to do so is simple. In the beginning of his profession, he was working with a pair of investors and had located a new area where they could purchase a house for $150,000 and rent it out for $1,500 per month, a no-brainer buy and hold deal. He advised them not to miss out on this fantastic opportunity as it was. "If it's such a wonderful idea, why don't you purchase one too?" they retorted. After giving it some thought, he retorted, "You're correct, I will." And he bought the house that was next door to them. You must be willing to put your money where your mouth is and invest in real estate if you are serious about dealing with investors. You can offer to contribute your commission to the purchase in exchange for a share of ownership if you don't have the credit or money to buy the property yourself. Number 6. Be willing to get your hands dirty. Investing in real estate is definitely not for the weak. You must be prepared to get your hands dirty, sometimes literally. Any investor will agree when you ask them, trash is cash. Real estate investors generate significant profits by transforming undesirable, dilapidated houses into gleaming treasures. Therefore, it goes without saying that you will need to get a little filthy while working with the majority of real estate investors. Occasionally, you may find yourself crawling around on your hands and knees in a crawl space covered in spider webs, searching for lead pipes, or trying to figure out why the kitchen floor is collapsing. You may need to inspect hoarder homes as well as buildings with mildew and fire damage. So, if you're serious about dealing with investors, leave the Louis Vuitton bags at home and don your Timberlands instead. It may entail grubby labor. And number 7. Know a deal when you see one. Real estate investors desire an agent with deal spotting skills in addition to local market expertise. An agent who sends a contractor or a property that makes no sense to the investor is the biggest source of frustration. It's a waste of both your time, and it will guarantee that you are removed from any investor's list of favored agents. Therefore, spend time conducting some preliminary research on a prospective investment before submitting it to a potential investor. An experienced buy and hold investor, for instance, will anticipate that you will evaluate the deal's cash flow and cash-on-cash return before presenting it to them. That's it for this video, Real Estate Heaven fan. Remember to subscribe to our channel. And if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your fortune. Remember, you can watch video after video, but it isn't until you take action that you'll start to see results. See you on the next one.